Time for the latest earnings outlook now with Research Director Shiraz Mian. Shiraz, last time we spoke about Q4 earnings season, you made it a point to say that guidance was going to be key as far as corporate commentary coming out is concerned. So now I'm going to ask you, how is that guidance shaping up? Are the CEOs buying into the idea of bluer skies going forward, or are they still cautious?
There aren't any bluer skies on the horizon, at least not yet. But it's not as bad as many of us had suspected. And you're right, guidance, I did mention, was the key. And the reason for that statement was that the expectations for Q4 had essentially flatlined as we moved towards the end of the quarter. But expectations for the coming quarters and for full year 2013 were still quite high. And the question was, would those expectations hold even after we see this reporting season? So there's nothing positive on the horizon that management teams told us about for 2013, particularly for the first half. But it's not as grim either as what we heard from them in the third quarter. You would recall that there was a flood of warnings and negative guidance at the time of the third quarter. This time, when they mentioned China, there would be some positivity associated with that. In fact, even Europe and stability would be used in the same sentence. So nobody's raising guidance, barring a few exceptions. But the level of negativity is a lot less relative to what we saw. So expectations have started coming down a little bit for the first quarter and the first half, but they still remain quite high.
All right. So run down the scorecard for us here.
Yeah, so we have, just before coming in, I ran the numbers, and this gives you a relatively busier view of the entire scorecard that's in my earnings trend piece.
And this is as of close of business on the 30th of January?
No, this is as of the reports that came out before the open Thursday morning.
On the 31st.
That's
okay.
right. So we have a total of 223 S&P 500 companies that have reported, and that these companies account for more than half of the total earnings that will be coming out in the fourth quarter, and more than half of the total market capitalization of the S&P 500. So we have crossed the halfway mark for the Q4 earnings season.
Okay.
Earnings growth is up 2.5% relative to the same period last year. 66.4% of these 223 companies are beating earnings expectations with a fairly healthy median surprise of 3%. The picture on the revenue side is quite good too.
Yeah, revenues seem to be improving.
That's right. 57.8% of the companies are coming ahead of top line expectations. The growth is 0.4%, and the median surprise is positive, 0.9%. So a lot better performance than what we heard from these companies in the third quarter. Generally in line in terms of the beat ratio and the median surprise with the last 4 to 6 quarters. The growth pace is on the lower side.
Yeah, top line revenue is improving. That's a big one. That's important.
A key reason for why the beat ratio and the surprises are so good relative to what we saw in the third quarter is expectations. Expectations had really come down ahead of this reporting season, and that made it easier. But as we mentioned earlier, guidance hasn't been that bad either.
Yeah, so compare this earnings season to other earnings seasons for us.
Yeah, and as I briefly referred to, this is turning out to be significantly better in terms of growth, in terms of beat ratios, and also in terms of the median surprises compared to the third quarter of 2012. So we have the earnings growth, as I mentioned, is up 2.5% for these companies. these same companies had negative 2.2% growth in the third quarter. When we take the average for the last 4 quarters, there was a growth of 6.2%. So the growth rate is better than what we saw in the third quarter, but lower than what we saw in the last 4 to 6 quarters. The same way as the slide shows, the beat ratio is way better than what we saw both on the earnings as well as on the revenue sides compared to Q3, and in line with what we have been seeing over the last 4 to 6 quarters. So better than Q3, in line with historical averages. That's the key takeaway.
So it sounds like you're becoming more optimistic than you've been in a long time.
Well, it has turned out. It has turned out to be better than what I was suspecting. As I mentioned, the expectations were set up by what we had seen in the third quarter, but there's no growth. Growth is almost non-existent, and that's what I want to show you in the next slide.
Okay.
Which basically looks at the expectations for the rest of this season and also for the coming quarters.
All right.
And as you would see, in the fourth quarter, the total earnings growth would be 1.4%.
Okay.
Now that's a tad bit better than the flat performance that we saw in the third quarter,
Right.
But hardly anything to be excited about. You would recall that as the calendar fourth quarter was getting underway back in October, the expectation was for fourth quarter earnings growth to be north of 8%. So even though those expectations really came down, we are ending up with something like 1.4% right now, which in my view will ultimately come down to about 2.5% growth when everything is said and done. But as this slide shows, we are seeing this moderate growth pace move into the first half of 2013, and then there is a major ramp up in earnings growth expectations for the full year. So 4 to 6 months back, the expectations for 2013 were in the double digits. They have started coming down, but they're still, in my judgment, on the higher side. So you could say that I'm a little bit positive on this earnings season, but relative to what the market is expecting for the rest of the season, I still see quite some downside.
Okay, thanks for that. And you can check out other interesting commentary by Shiraz on our website, Zacks.com. There's a few places that you can check for his updates through earnings season, especially during the peak reporting times. He does do a text version of earnings trends that gets posted to the website, and also daily in the Ahead of Wall Street section of the website. He does updates, quick updates on what's going on in the earnings season. With Shiraz Mian, I'm Terry Ruffalo.